Welcome, ladies and gentlemen, from me, Guy Monson, to our regular 6-minute strategy update. This week I'm going to look at the run-up to the US election and what a Biden blue sweep might mean for investors and for financial markets. We're going to look at his debt issuance programs, how these might be funded, and comment on the fact that funding through the central bank is an option for developed markets. It's much less of an option for emerging markets, and look at some of the inequality that's coming through as fiscal stimulus and monetary stimulus are a developed world phenomenon to a large extent. So let's begin with financial markets on slide 2. Gold still leading the charge for the year to date for a sterling investor, up 25%. UK gilts and world equities up about 5 to 6%. Quite remarkable given the drawdown in the underlying economy. And the UK still the clear laggard, down 25% for the year. No relief yet from the restart of Brexit talks earlier in the week. On the right-hand side, the volatility numbers continue to be stuck round about 28, quite elevated. And that's probably the result both of uncertainty over the timing of a vaccine and, of course, the run-up to the US election. On slide 3, I'm afraid our regular COVID stringency index numbers all moving to the upside as the European lockdown intensifies. That on the right-hand panel is eating into economic sentiment, and the European PMIs, those are business sentiment indices, all drifting downwards, a particularly sharp correction of 47.3 from France out this morning. Moving to the US picture and the election in particular, what impact will the last 2 weeks have? How significant was the presidential debate last night? And what should we be factoring into our investment strategy? Well, first of all, Nate Silver, the distinguished commentator, indicates in his chart that typically votes in the last 2 weeks of an election don't have a material impact, except perhaps for Clinton in 1992, where there was a 7% move. Normally the move is under 1 to 2%. That would certainly tie in with the latest electoral numbers. We ran these last night. You can see in the top left that Biden lead coming in a little bit, that Trump lead accelerating a little bit, coming in from perhaps a 10% difference down to 7 to 8% today, but not enough really to materially swing results. A similar message from the Senate, still looks like a blue sweep, but again, those odds coming in very fractionally to 0.62 there on the bottom left. Where you are seeing more of reaction is in some of the swing states, and that Florida election is narrowing. And Nate Silver makes an interesting comment in his latest piece where he's looked at the relationship between voting anomalies in one state and whether those ripple through to another state. His comments are as follows. If Biden were to win Florida, for instance, his chances of winning the Electoral College shoot up to 99%. And because Florida counts its votes quickly, networks would opine on the result very early in the count. On the other hand, if Trump were to win Florida, because this will ripple through to other marginals, his electoral college chances rise to 39%, making the race practically a toss-up. So some of these individual states are going to be hugely significant on election night, and certainly if Biden's lead is material, would eliminate the possibility of a disputed or much reduce the possibility of a disputed result. The increasing likelihood of a blue sweep and what this means for spending programs is seeing some modest in reflation coming back into the US economy. The 5-year forward inflation rate, which we looked at in previous discussions, creeping up there to 184, the dollar weakening to 93 on the Dixie index, and all this allowing bond yields to creep up from their lows of late July, early August, with the 10-year yielding about 87 basis points today. So that's the message the world is seeing of a slightly more reflationary, debt-funded, stimulus-funded US economy under a Biden administration. Now, all of this is going to add hugely to debt, along with the programs from the rest of the world. According to the IMF, about 11.7 trillion of total spending worldwide. That's already taken debt up to 100% of GDP and higher in advanced countries. It's worth making the point here that while Biden and many of his Western colleagues, including Johnson and the European Union, have that option, it's much tougher for emerging markets. They can't access central bank funding in the same way. As you can see on the right, those blue bars are countries in the Western world, Great Britain, US, ECB, Japan, where the central bank has brought up a huge portion of that debt. Much more difficult for the red lines, those countries in the emerging world, where they're much more constrained in the support they give. Indeed, the IMF reported that not a single sub-Saharan country has issued any external debt since the COVID crisis began. It's interesting how unequal this recovery is becoming. and will be a key issue for Biden as he starts to rebond the US into the global system. So let's wrap up. A Biden election probably mildly negative for bonds, hence our neutral position. The stimulus coming through will be useful to equities and to earnings, particularly his green revolution, hence our modest overweight. And with 0 to negative yields across cash, we're staying near to our maximum underweight and reallocating that money to alternatives, renewables, and infrastructure projects, where we see inflation-adjusted returns rolling forward nicely from here. Well, I hope that gives you a little bit of a wrap up. I hope it gives you a snapshot of where we are, and particularly interesting that count on Florida. Watch it closely on November 3rd. Thank you.